Hi everyone, this is Jason Burak of Wall Street for Main Street, and welcome to a Wall Street for Main Street podcast. Today we are joined by Mo Dawoud, who is the co-author of the Treasure Hunting for Precious Metal Stocks report, and he is also a Wall Street for Main Street co-founder, and he also has the Mo Money blog. Hi Mo.
Hey Jason, how you doing?
Good, good. It's been a good President's Day weekend, and tomorrow's the holiday, so I'm excited to basically have a day off from the markets. What about you?
Oh yeah, same here. After a great week last week, silver did wonderful last week. Gold did lag, but it'll catch up eventually. But yeah, I'm looking forward to the day off in the market too.
Okay, Mo. So today, let's get down to business here. We're going to go over some charts for our listeners here. And Mo, I think you said you wanted to start with the silver chart, the commodity future silver chart. So,
Uh, yes, but before I go into my chart, I just want to say that I do discount the technical chart to the fundamentals. I look at the fundamentals first before looking at the chart because the chart will not tell you the whole picture the whole time. I believe you follow the same belief as well too, Jason, right?
oh yes, definitely. I'm attached to the trend, so I'm not trying to make a quick buck and put all the money in and take it all out on market timing. I don't want to miss the move. Well, we've already had a pretty big move in the last like 8 or 9 months in especially silver. So I'm glad I didn't miss it because I know some people that were just waiting and waiting for the technicals to say that, oh, we bottomed, and then it really didn't bottom. Silver's just been basically moving. Because, on the last dip, when silver dipped below 27, I know there were some people thinking that it would, go below 25 or, bottom around 25, and then it never did. And now, they're probably going to be scrambling to buy now around 33 or maybe even higher. It's looking to me like I think we're going to go higher. But without further ado here, what we're going to do for our listeners is we're going to have Mo break down the charts, and then we're going to attach in the charts into the podcast here so people can look at the charts while Mo is talking.
Yes, Jason, that's correct. Well, for the silver chart, I have one little hint that will help the traders once they see a dip in the silver and gold chart as well. If they use the 20-day moving average on their chart, on the weekly chart, they could see that it actually provide a good support line for the chart. Like for example, when silver dipped started to dip in January from about $31 all the way down to I believe it was $26. Um, it bounced off the 20-day moving average and went straight up. I mean, so I believe the 20-day moving average is a good support line for any trader to use, any investor too, if they want to know when this market's going to turn around and go up again. Now, the silver chart, if you look at the silver chart from the day chart, not the weekly, but the day chart, you can see the 3 month base that formed right after it broke $30. It had a hard time going above $31 for about 3 months and was able to finally break that resistance last week with high volume and with no hesitation as well. I was pretty surprised that it broke 31 that easily. I could see the silver going to 35 before next resistance. I hear people saying that I could blow 35 and go up to 40 and then bounce back down to $35, $36 range. That could happen as well. I wouldn't be surprised. If you look at the Williams percent R indicator, it does indicate that it's overbought, but in any bull market, that doesn't tell you much because if you look at any bull market in the past, they will be in the overbought territory for a very, very long time, and you can't even tell when it's going to come back down. So I would stick to using the 20-day moving average as a support. And then for the resistance, I would look at the chart. I would look at the price action in the past to plot the resistance, and I could see in the past that it had a hard time with the $31 mark. So I marked that as my resistance. Um, I thought that it could form a handle before going up, going past $31, but it did. It made a small handle, but I wouldn't confirm it as a handle. It just blew the roof and just went up. I was surprised. I was real surprised, Jason. I would say that I thought the silver market would start moving in March, but it decided to move now due to the news out there about the supply shortage and the silver backwardation.
Yeah, Mo, I think you're right on a lot of your analysis there. Not only are we in a bull market here, Mo, but we're also in a unique situation in silver, like you said, with the backwardation. But there's also, a massive short squeeze, I think, is going on. You could see it in the chart with the some of the parabolic moves that you can see some of the, straight up lines in silver that have occurred just in the last few months. So you're starting to see the short squeeze accelerate now, Mo, as JP Morgan ducks for cover. JP Morgan and some of the other large shorts that are involved in this market here. The short position is still very massive. We're waiting to see, clearly on the chart. I'm looking at the SLV chart right now. Like, I know you were looking at the silver chart, but I'm looking at the SLV chart right now, and, the cup was clearly defined, and, we're waiting for the handle. But, things can be overbought for a long time, like you said, in a bull market. And in a short squeeze, things can go really overbought for a short amount of time, like way overbought. So I think this is starting to look like, from a chart perspective here, like we were stair-stepping up for a little while, but now it's starting to, we're starting to move up leaps and bounds here. Looks like the backwardation has accelerated the move higher.
Oh yeah, I agree. And if you look at the SLV chart, the volume there, the high volume confirmed the breakout. It broke the $30 mark for silver, the resistance at $30, and it shot up to 31.78 before closing on Friday with high volume. So I'm very encouraged by that. The same for the silver future chart as well. It had high volume too. So that indicates that it broke the resistance for good.
Now, Mo, some people would argue that the silver stocks have not set higher highs, so this doesn't confirm silver's breakout. But can you talk about how that might not be correct? And how, the silver stocks, they tend to lag, due to the slingshot effect for silver in general, that the silver stocks tend to lag, but then they tend to, catch up and then outpace the physical bullion.
Oh yeah, I agree. Well, first of all, I don't even look at how the silver stocks are doing. I mean, I don't even look at they making all-time high yet compared to the spot silver price. I don't do that kind of analysis. I believe that it doesn't say much about the bull market. If you look back at the uptrend that went from 18 to 31, it took a while for the silver and gold stock to catch up and break all-time high, as I remember correctly. So it doesn't really tell you much. For example, like Hecla, Hecla mining.
Yeah.
The all-time high for Hecla mining is $14. And it's still hovering around $10 and I think $10.50. I'm not sure, but the silver the silver spot price went from 18 to 31. Does that mean that we're not in an uptrend? You tell me, Jason.
No, but it just might mean that Hecla management has not made the best decisions. They could, I believe there was some insider selling of some shares here. If I look that up really quick. I believe some insiders dumped some shares in the last few months. Yes, there was. There was quite a lot of insider selling, actually.
Well, Hecla is not that bad of a company. It's an okay company, but they're not the only one that hasn't made all-time high yet. That's the point I'm trying to make. It doesn't. I don't look at the silver chart to confirm the uptrend. And Another thing to consider is that these server companies, when you look at their earning, it doesn't reflect the spot price for today until um, the next quarter earnings comes out. Like right now, if the earnings for these companies are about to come out very soon, correct?
Yes.
And once you look at the earnings, you expect to see that they are using numbers based on the spot price. It should be like between the $28-$30 mark. So they're not even using the $32 to $31 mark yet.
Yeah, I would say the last quarter earnings for Q1, or actually they're going to be reporting Q4 2010, right? Not Q1. So they're going to be reporting Q4 2010 earnings coming up. That's probably only like, $27 to $31 silver at most. So that's probably going to be the range there for most of the silver. The market obviously is not going to be pricing in really that kind of silver yet. So that would just continue to strengthen the argument for why the silver shares, the silver miners, are going to continue to lag for a little bit longer. Although once these earnings come in and confirm that the last quarter earnings were good with that silver price. I see the shares starting to catch up and exceed the bullion. The bullion is leading the way. Oil prices, some of the input costs, oil prices have trended a little higher. They pulled back, but I don't see tremendous margin compression here. I think gold and silver have, risen faster than oil in general for at least 6 months now on a percentage basis.
Yeah, I agree. I mean, don't get me wrong. There are silver stock that has made all-time high as the price of silver gone up. One example of silver wheaten, which I believe is your favorite and my favorite, one of our favorite silver stocks. If you go back and look at the charts for the past year, it made all-time high as the silver price, the spot silver price went up. Right now, it's also making a 3-month base, and it is close to the $40 resistance. It has not touched it yet, but it'll be interesting to see if it does break that resistance on high volume. If it does, then our next resistance will be at $42. Now, if it doesn't break the resistance at $40, I expect it to consolidate for another month, and that would make the chart look like a head and shoulder pattern. And after that, I expect it to continue their uptrend. I believe this stock could finish around $50 by the end of the year, if not more. This is a great company with great fundamentals. Their operating cost is low, and they have huge profit margins. I don't know how you feel about this company today, but I believe this company could hit triple digits when it's all said and done.
I think silver wheaten will easily be in triple digits, Mo. Even if silver price just stayed at these levels, I think silver wheaten, once they're two large silver streams, they're cornerstone ones, and they have one just coming online now in the last few months. But once the Barrick Pascua-Lama one is finally online in 2 or 3 years, then silver wheaten will have a humongous amount of earnings growth and production growth. I'm looking at a silver wheaten chart now, Mo. The cup seems to be well formed to me. It seems to have mimicked the SLV chart pretty well, and the silver chart, where I don't really see the handle. I just see, an upward move from the cup. And also the volume. I'm looking at the volume too, and you can comment on this when I'm done. But the volume to me looks, and I'm looking at like since 2005. But the volume seems to nicely be trending higher too up till now.
Oh yeah, I see what you're looking at. If you're looking at the weekly chart, 2-year weekly chart, you can see the cup. Now, sometimes it doesn't make a handle and just goes straight up. I've seen that before. And if it does that, then I have to see higher volume to confirm it. And like I said, the next resistance is at $40. I mean, and they're not too far away. They're at $39.19 right now. and it went up 6.5% on Friday on very high volume. So that's good. So let's see what happens at the $40 mark. If it doesn't break that resistance, then I wouldn't be surprised if it makes another small 1 month base before trying to break that $40 resistance again and move up higher.
If Silver Wheaton announces a dividend, Mo, I think we're going to see the stock price just spike too. I think we'll see fairly easily over a 2 to 3 month span. I think just Silver Wheaton announcing any kind of a dividend, even if it's small to start off with, you're going to see pension funds that weren't allowed to buy the stock before go in and buy the stock due to their charter because they're only allowed to own dividend stocks. So I think the dividend announcement alone over a 2 to 3 month span after it's officially announced, Silver Wheaton's paying a dividend, I think that will create a nice jump in the stock price too. So I think conservatively, even if silver prices just stay at these levels and Silver Wheaton announces like a dividend increase, creation of a dividend, its first dividend, I think we're going to see a stock price for the SLW Silver Wheaton above $50.
Oh yeah, I mean I wouldn't be surprised. Once again, this is why I discount the technical to the fundamentals. This kind of stuff doesn't show up in the charts. So.
Well, it would show up in the charts, afterwards, but that would be, a fundamental reason for why more people, there would be more buyers and sellers of the stock, more people who would buy and hold the stock.
Oh yeah, I agree. Silver Wheaton is a great company, great management. I believe some of the management went on and created their own companies like Gold Wheaton and Sandstorm Gold, which is one of our favorites as well. From the chart wise, it looks very good. It's still in a base, and if it can break the $40 mark, then after that break $42 resistance, I think it will go make another uptrend to 50. And then after that, we'll see what happens.
Yeah, I mean, I think Silver Wheaton is core portfolio material, so I think most people who have it in their portfolio shouldn't really worry if it drops, a couple bucks here, a couple bucks there. I think it's a great business model, a very unique business model for people who are not familiar with it. They're basically a commercial scale cash for silver company. So, they're not mining. There's not really any mining risk. They're really nicely well diversified, and their costs are 100% capped. So I think, fundamentally, it's a great company to own. Looks like the charts if people think silver prices are going higher, I think if they don't own Silver Wheaton, I think they should buy it now. I think they should definitely consider buying it before the dividend goes into effect, because I think there's going to be a new base of people holding at a much higher price once the dividend is implemented in the stock, especially because you and me project higher silver prices going forward here, Mo.
I agree, and I just want to point out that people can use a 30-day moving average as a support line as well for Silver Wheaton, because I heard some people say it could go down to $25, and I did not believe that for 1 second, because I thought it would just hit around the $29 mark and go back up, according to the support line of the 30-day moving average, and I was correct. So any traders or investors out there, they can use the 30-day moving average as a good support.
Okay, Mo, what's the next chart that you wanted to look at?
Well, I want to focus on gold next. For the gold chart, I was disappointed that it had continuing to lag, but it's going up though. Last month when I wrote my TA blog on my momoneyblog.com, I said that if you use the 20-day moving average for the gold chart weekly for the past 2 years, you could see that every time it touches the 20-day moving average on support, it bounces up. Like if you go back to January 2010, it went a little bit below the 20-day moving average, then it shot up about $200. And then in July, it touched the 20-day moving average again, and then it went up at almost $200. And now it dipped for the better part of December and January, touched the 20-day moving average, and now, as predicted, it's bouncing back up. and I believe it will test the 1420 resistance. It's not this month, but then somewhere in early to mid March. I mean, this commodity has been rising compared to silver since December, and it has a lot of catching up to do. And I think a move up is warranted for gold.
Yeah, I definitely agree, Mo. I think silver has outperformed gold for months now. I don't know if gold will outperform silver, for the entire year, but I definitely think gold will start to catch up quite a little bit. Probably, in March, after, February's over. Normally, gold is kind of slow. Gold and silver are both kind of slow seasonally, at least the last few years in January, February. Although silver hasn't been, slow this February. And they get things going again from March seasonally through to, like, the beginning of summer. So from March to about June-ish.
Yeah, I've been scratching my head to why gold hasn't been making the kind of move silver has. I mean, silver went up $1.11 at one time last week, and gold only went up $10. I expected gold to be up at least $50 when silver is making that kind of move, and it didn't happen. And I'm not sure why, but I do believe gold has a lot of catching up to do, and I think it will explode in March. I would be surprised if that happened.
Yeah, I mean, I don't think, I think from a fundamental standpoint, I don't think the short interest in gold is as large as the short interest in silver. Now, there's still a lot of paper gold out there, but, it's not as high on a percentage basis, where I've, read some estimates that, there could be over 400 ounces of paper silver for every 1 real ounce of paper silver. I don't think it's that way in gold, Mo.
Oh yeah, I agree. And once it breaks the 1420 resistance, I believe it'll try to test the 1450 resistance. I do not believe it'll have any problem going past through that resistance, and right after that, I think it will try to play around with the $1,500 resistance before making making another base there.
Yeah, Mo, I'm looking at the chart of GLD right now, and it looks like there's a smaller cup forming on the GLD. It looks like, we dipped a little bit, and then we're starting to form the end of the cup here, and gold will figure out very shortly if we're going to break out from there. So it looks like gold might have a little bit more consolidation, whereas silver's already broken out and it's closing the gold to silver ratio. But looks like gold might have a little bit more. I'm not the I don't pretend to be the chartist that you are, but it looks to me like gold might have a little bit more of a cup to form before it breaks out.
Oh yeah, if you look at the GLD chart, 3 times it tried to go past the 138, actually the 138.50 resistance, and it failed. So, and it's coming back toward that way. So it'll be interesting to see if it can break that resistance for the 4th time. If not, then I expect it to bounce back and make a handle on low volume before going up and trying to test that resistor again.
Yeah, I have a good feeling that gold will break out, Mo. I just have a good feeling that gold will break out. Like I said, a lot of these gold mining companies, they are not only are they producing gold at a high paper price, but they are also a lot of them are copper companies too, that they have a good amount of copper in their deposits, and copper prices are almost $4.50 a pound. So with oil at these prices and gold and copper at these prices, these gold miners, if they don't have production problems and they're producing what they're supposed to, Mo, I think a lot of these gold miners can make like record profits, especially because of the copper as like a an extra revenue generator in there with the gold price.
Oh yeah, I agree. And every year we're seeing the cash cost for these miners going down. The one concern I have is the cash cost can be affected by the rise in oil price, since that's included in the cash cost. Is that correct?
Well, the cash costs are going to go down as long as the base metals stay high and the oil prices don't rise as quickly as like gold and the base metal byproduct tax credits that a lot of these companies are using. So basically, it's going to be like as long as gold and copper are going to continue to move higher, and oil's not going to choke off any of the profits. So I'm not seeing any of the oil. Oil hasn't risen high enough yet where it's going to choke off the profit. $4.50 copper, trust me, is a lot higher than than these gold copper miners. Than these gold miners that have a good amount of copper in their deposits were thinking when they were projecting out the copper price. Sure, they were thinking like $2, maybe $2.50 copper. They were not thinking $4.50 copper anytime soon.
Oh yeah, and demand for copper is still great. China is continuing to buy all the copper and storing it in a warehouse somewhere in China for future use. So I believe that would be a bullish sign for copper.
Yeah, and India has all these, electrification projects, and now JP Morgan is going to come out with a physical copper ETF, supposedly. Wink, wink. We'll see. We'll see about that one. Do you have any more technical analysis for this chart, Mo, or do you want to move on to another chart?
I want to move on to the GDX, which is a mining ETF that people use to trade their positions around. From looking at the GDX, it's pretty much similar to the GLD, where the GDX next resistance is at 59.50, and once it gets past that, it will try to make an attempt at the 62.50 resistance. And if it can go past that on high volume, then I believe the GDX will be in an uptrend to $65. I expect GDX to finish around $80 by the end of the year.
Whoa, it's a big jump.
Yeah, it is a big jump. Well, if you look at 2010, it went up almost $20. It went up from $42 to $62. So I believe it can do the same price action and for 2011 based on that. Now, I could be wrong because there's a lot of external factors that can make the chart look like nothing is going on. So don't take my word for it, but that's my prediction. I believe it'll finish. I think it'll finish around $80.
It definitely looks like a cup with a handle to me is forming again, Mo. Here, so we're starting to see these markets become aligned. Are you noticing the decoupling from some of the other regular stock indices with gold and silver? Are you seeing any of that?
The decoupling from the gold and silver from the dollar?
Yeah, or like things like, the Dow or the S&P where like gold and silver are starting to, seriously outperform regular, paper assets like regular stocks.
Oh, yeah, I have been noticing that. I've been seeing days where the Dow Jones or the Nasdaq is only up like the Dow Jones only up like 50 points, and I go look at the mining companies and they're up like, 5-7%. And the reason for that is that they don't follow the Dow Jones. They follow the spot price for gold and silver. So you can have a bad day. I remember last year when we had that mini market crash, and all the mining stocks did not go down that far. And the reason is because it follows the gold and silver price. I believe on that day the gold and silver price was pretty much flat, and so the mining stocks were not affected that much from that mini crash that we had last year. So I believe that the mining stocks for gold and silver follow the spot price for gold and silver. I don't believe it follows the general market.
Well, that's good. Then we are starting to see, more decoupling. It's been a gradual process because I know some of the people that were invested in 2008 were like, there was no decoupling. Well, I think we are starting to see more decoupling. After that, I think more people are starting, they're seeing the more money that's in the system. They're seeing the announcements coming out of these, other central banks. They're seeing that the pigs nations still need to be bailed out. The U.S. states and municipalities are still in trouble. QE2 is still a few more months of that, and then the odds are, looking to me like it's guaranteed we're going to have QE3 or something. I don't know if it'll be called QE3, but it'll be similar in stature to QE2, where the Federal Reserve, tries to buy the 30-year treasuries to keep the interest rates low.
Oh yeah, I agree, and I think I mentioned this previously that the Federal Reserve is the #1 holder of the Treasury bonds now. And by the end of June, when Q2 ends, they will have more holdings than China and Japan combined. Now, that's how bad it is. Now, what are people going to put their money in? The bond? I mean, the bond fundamental is so bad now. Are they going to put it in, the banking stocks? They're on life support. Without the bailout, they'll die today as we speak, if we pull the plug. Or retail, with inflation, retail is going to have a very bad year this year. So the only place to put it, to me, is the natural resource industry, like oil, gold, silver, copper, any company that has hard assets.
Yeah, and also, might I add, Mo, like food and agriculture, I think, is pretty good, considering I think it's just the beginning for some of these, food price inflation and food riots, like with Egypt and Tunisia. I think we're going to start seeing this elsewhere. I've heard rumors that the price of food has already gone up 50% just in the last year in China. So.
Yeah, and the World Bank last week announced that food price went up 29% worldwide last year, and they state that it's at dangerous levels right now. So for all those deflationists out there that's arguing that we're not seeing any inflation, I'm seeing plenty of inflation. Just go to the gas station and put some gas in your car. That's inflation right there. It's going up every day.
Mo, some of those deflationists would say that this isn't really, inflation, that this is just, speculation, but, they're skirting the issue that the Fed, is creating this type of monetary policy because, all the central bankers around the world have to react to what the Fed's doing, right? So I think this all starts, here in the U.S., and I think, we've been exporting, our biggest export for the most part for a while now has been inflation. And, you're finally starting to see it affect really badly a lot of, foreign countries, food and other prices there. And then you're starting to see that creep back through the system, I guess, here in the U.S. into some of the consumer prices here in the U.S.
Oh yeah, I agree, and I think this is like the dollar is a dying currency right now. Their days as a reserve currency is coming to an end. I mean, people in China and India are complaining that the Fed action is hurting them because, well, China is pegged to the dollar, so when the Federal Reserve print, they have to print to keep their currency pegged to the dollar. So
yeah,
I believe.
Yeah.
Go ahead.
Yeah, I mean, for now, Mo, I think they are going to try to keep the dollar peg in effect, but we both agree on this. I don't think it's very smart for them to keep the dollar peg when the dollar is like going to drop like a lead anchor, especially against these G20 currencies. I mean, against the G7, like against Japan, UK, the euro, the dollar looks a lot better than it really is. But against these other currencies in the G20 in these developing countries that are like creditor nations, trade surplus, their populations have a higher savings rate, they produce, they underconsume. I think the dollar is a lot worse than the dollar index would say. Before we go take a look at the dollar index, Mo, could you care to comment on the GDXJ? Because I know we've been selling a good amount of copies here of the treasure hunting report, and let's check on the GDXJ. Like the chart for the GDXJ, actually, it looks like the GDXJ has already basically started to break out here.
Yeah, it pretty much mimics the GDX. Well, GDXJ has a portfolio of junior mining stuff, and right now its resistance right now is at $39.50. After that, it's $40. If it can break the $40, I could see it going up to $50 before making another base. I think the GDXJ, I wouldn't be surprised if it finished around $60 by the end of the year. And if you take this chart and match it up against the GDX, it's almost the same. So the analysis is pretty much similar.
Yeah, Mo.
Yeah, go ahead.
Yeah, Mo, and volume down there on the bottom also looks like since September it's been slowly starting to, scale up and rise nicely again too.
Oh yeah, the volume for all the charts we've been talking about today look fantastic. It looked like it's heading toward to breaking out the base and going up. Now, GDXJ volume, it's not at an all-time high yet. It's trading around 3 million. When it was breaking out back in late 2010, on some days the volume was around 5 million. So once it breaks the resistance, I would like to see the volume be around 5 million. That would be an encouraging sign that the price has broke the base and it's going up again.
Okay, now one more question here, Mo, before we get to the dollar index.
Sure.
Do you still think our 2011, our beginning predictions there for silver to end the year around like the $45 range or so, and maybe pull back a little bit to like 42 or something like that, around 45? Do you think that's still going to be a good price target based on some of the moves you're seeing already, or do you think we're going to be maybe a little low?
Well, in my blog, I said that I think the silver price will hit around $45 to $50, between there. But after seeing this early price explosion in silver, I think $50 will be a layup for silver. For gold, I still think it will finish at least above 1800. I'm not optimistic on that prediction yet, but I'm gonna stick with it.
Okay, very good. Yeah, I think in the near term for silver, I think like we'll see a Fibonacci move higher. Probably one Fibonacci is about 32%. So I got that wrong in the last podcast. That 32% of $30 would take silver to a price target of about 39. So I think silver, as high as it could go in the short term, would be 39 maybe before it pulls back to like the 36 range to consolidate for a little. I know trader Dan Norsini, the guy from King World News Weekly Metal Wrap, he said $33.50 is probably next resistance level, but he said it's a really old resistance. I think he says 30 years old. So I don't know if that's, a reliable resistance level anymore. For gold...
Oh, no, I don't think so. I mean, 30 years ago, the silver market was totally different. It hit a whole new game in 2011. And you have global demand and the global attention on silver. 30 years ago, that wasn't the case. And the demand today is higher, so I'm not going to use that as my resistance.
Yeah, I think that's some very good points, Mo. I think there's a lot more industrial uses for silver. Silver wasn't really used for many industrial purposes, except for, photography and some x-rays and stuff back then. Now, and maybe silverware, but, now silver is used in so many more things electronic. So I think there's a lot more uses for silver. And then, the good point you pointed out about the global investor demand now for silver, as China now is a net importer of silver, and investor demand is just going ballistic in Asia.
Oh yeah, I agree. And as for I think I stated this before, my intermediate prediction for silver, that it will blow past the next resistance and go up all the way to $40 before going back down to around $36 and $38, somewhere around there.
Okay, and for gold personally, like I said earlier in the year in my 2011 forecast that I think I would be happy if gold settled at the end of 2011 in the $1,650 to $1,600 an ounce range. So I'm sticking with that too. I would be very happy if I was a gold investor if I got that. I don't know, Mo, if we'll see 1,800 gold this year yet, but we are trending higher. Where the gold demand, like that Financial Times article about the gold demand out of Asia in the last week, how it's insatiable, it's surprising investment bankers how amazing the investor demand for gold is. I think that's all bullish stuff. I think that means that the dips are being bought, by people who are strong hands. So I don't know if we'll see $1,800 gold, but I think 1,600 is reasonable given the circumstances. That there's a lot more base money out there in the world economy right now, and that there's also sovereign credit default risk. And then there's, the problems with the U.S. states and the municipalities, and those haven't even been addressed yet, Mo, really. So.
Yeah, no, and who knows how gold will be reacting if the Fed decides to bail out the state.
Yes, it'll be very interesting. So, our last chart you said you wanted to look at for us, Mo, was the U.S. dollar index, right?
Yes, I do want to say a couple of things about the dollar index. It has been trending down since mid-February. It went from almost $79, now it's around $77, and the next support for the dollar to try to take out would be the $77 support. Now, if it can break through that support, the next support after that would be 75, and then after that, the next support would be 72, which is the all-time low for the dollar. Now, after it blows past $72 support, I think dollar will be in a free fall. It could go as low as $60 or $50. Who knows how far down it can go with all the money printing going on. But I don't think it will go past the first support at $77 yet. I believe it will correct and go up and try to test the $80 mark before making another downtrend and perhaps breaking the $77 support.
Now, Mo, a good friend of ours, Aaron Basile, who's a very good market technician and technical analyst and trader at such a young age, I might add too. He wrote an article about how he thinks that part of the decoupling, that we were talking about, will be that the dollar will actually, go on a rally on the dollar index while gold and silver go higher. So, what type of possibility do you see that occurring for the rest of the year? Do you see the dollar index, bouncing off of support or gaining support here and not crashing like you said? What type of probabilities do you see that happening there? Because, like the dollar index really is not comparing the dollar with, really other healthy economies. It's just really comparing the dollar with, other unhealthy economies like the UK and the Western European countries in the EU. And, Japan's got a unhealthy economic situation, although, their companies are actually, doing better than a lot of the other large companies outside of Japan. So what would be your opinion there of Aaron's postulation there from his article about decoupling?
I agree. I think eventually gold and silver will decouple. When? I'm really not sure. But keep in mind that gold and silver prices are going up not only because the U.S. dollar is going down, it's because all the currencies are losing value. The euro is losing value. The Japanese currency is losing value. The China currency is losing value. The UK currency is losing value. The Mexican currency is losing value. So gold and silver does very well when currencies are unstable, whether it's the U.S. or any other country. People should keep that in mind because when decoupling occurs and the dollar goes up, it may be the silver and gold price might be going up because another currency on the other side of the world is going down, like China or Japan. So I believe decoupling will happen. When, I'm really not sure. I do think the dollar will rally to the $80 mark before going back down again. But I agree with Aaron. I think there will be a decoupling.
Okay, Mo, as we wrap things up here, do you have any more additional comments for us on gold, silver, mining stocks, or the dollar index?
Yes, I just going to be interesting to see how gold reacts to the silver rally last week. Will it continue to lag, or will it go up and catch up with silver and hit the $1,400 mark, and then go to 1420 and break the resistance? We'll see. I think that will be very interesting. People should keep an eye on what Ben Bernanke is saying about the interest rate and QE2 and possibly doing another bond purchase program, aka QE3. If he does hint that he will continue it beyond June, that could spark another rally in gold and silver as well, like it did back in August when Bernanke hinted that there's not enough inflation, there's too much deflation, and that's what started the uptrend back in August. So people should watch out for that as well. And that's pretty much my focus for the next few months.
Okay, very good, Mo. And if people want to, read your articles, or they want to, possibly look into purchasing, a copy of the Treasure Hunting for Precious Metal Stocks report that you co-authored with Chris Marchese, where should they look on the internet to find those?
If they want to find my latest article, they can go to momoneyblog.com. I put up my TA articles there, and also some other stuff regarding what's going on in the economy. If they want to purchase a copy of my gold and silver report that has been highly phased by investors, such as Kevin Kerr and David Morgan as well, they can go to momoneyblog.com/silver gold report. Again, it's momoneyblog.com/silver gold report.
Okay, thank you very much for your time, Mo.
Thank you, and have a good night.